we will be lucky to maintain supply in the near term. Lucky for perhaps three reasons. The first is that the COVID-inspired downturn in oil prices cost the oil industry dearly, both in terms of free cash flow, which disappeared, but also in terms of investor sentiment, which is to say that oil share prices fell, raising the cost of equity, and debt became much less available. In fact, the junk bond market for energy disappeared. The consequence of that was that the oil industry spent perhaps 2 years deferring new project and sustaining capital investments of about $3 billion a day, which is to say that well over $1 trillion worth of sustaining capital investments weren't made. In a business where every day your basic business depletes, maintaining supply requires constant effort with regards to sustaining capital investment. So we're behind the 8 ball. We're trying to make up for the deficit now. The second thing is that the big thinkers of the world, the Joe Bidens, the Justin Trudeaus, that noted energy physicist Greta Thunberg, people like that have said to the oil industry, you will cease to exist in 2030 or 2035. You will have $1 trillion in stranded capital. And while they have said that, some of the biggest lending institutions in the world have begun to self-sanction, which is to say, despite the fact that the oil business is extremely profitable now, the cost of capital is extremely high. So even today, with operating margins above 50%, as generous as I've ever seen them in my career, the industry is believed to be underinvesting in sustaining capital investments and new project investments to the extent of about $1 billion a day. In other words, this year, we as an industry will have underinvested $365 billion. It's worthwhile to note that the big thinkers in the United States, be they the California governor, Gruesome, I think is his name, or Biden, are suggesting politically to the voters that they're doing everything that they can to lower prices at the pump, at the same time that they cancel access to drilling inventory for the oil industry. They caution the insurance industry not to insure oil and gas operations, and they tell the industry that it's a sunset industry. If the legislative body that governs an industry says we are going to outlaw you in 10 years, it isn't an environment that's conducive to spending $1 billion a day to build inventory that you believe that the government will steal.
And that CapEx that wasn't happening in 2020, that wasn't reducing the supply of oil in 2020. It's reducing the supply of oil now reducing the supply of oil in 2024.
That's
right?
correct.
It pays forward.
That's correct.
And you are an investor in a lot of these companies. I'm sure you talk to the CEOs frequently. How do these people who work at these oil companies, how do they react to the current environment when both government as well as shareholders, I mean, it's not as if, shareholders themselves, they ask for capital discipline themselves. They want pay down debt. They want dividends. They don't want an increase in production, which would mean they have to front up more money. At what point do you think it would what would have to happen for oil companies to really invest in production like they were during the 2000s, let's say?
Well, I think investors, first of all, need to segregate between those companies that are returning unsustainable amounts of capital to shareholders and those companies which are rewarding shareholders at the same time as they're investing in the future. You have companies like Exxon, despite Mr. Biden's continual bullying, that have invested twice free cash flow in sustaining capital investments and new project investments. In fact, they have done exactly what Mr. Biden has pretended to ask them to do. But that has been the exception, not the norm. Mostly, if you pay attention to incentives, you'll understand what executives do. And what the institutional investors have asked the energy companies to do is decapitalize, which is to say do share buybacks and do dividends. In other words, in effect, cannibalize themselves. And roughly 80% of the issuers that we look at, the public issuers that we look at in the oil and gas business, are doing precisely that. They're decapitalizing. They're returning unsustainable amounts of capital to shareholders. And while the share prices of those companies seems to do fairly well, generating yield in a yield-starved world, we don't, as investors, regard that as sustainable. So we're choosing to invest our own money in companies that strike a decent balance between rewarding investors for their patience in a trying time and continuing to grow the business. And mercifully, there's a fairly long list of companies that meet that criterion. Mercifully, too, they're fairly unpopular with investors.
Even in the oil and gas sector, they're unpopular?
I mean, it's odd.
Yeah, really.
Many of the oil and gas analysts believe they get paid for the quarter. And so they try and figure out what stock's going to do the best in the quarter. That isn't really how oil industry investment works. You have to invest for the 5 or 6 year time frame. You have to look at total return over time. And so a lot of Wall Street analysts look at stocks that have momentum. And they look for the cause of momentum, which is to say increasing dividend yields. And they buy stocks even though that dividend yield is transitory. The people who have made money in the oil business over time, and some of the tourists, which is to say the generalist investors who are now coming into the oil business, I'm going to say as an example, Warren Buffett, are looking at more sustainable yields. Certainly his big investment, Occidental Petroleum, is one that is investing fairly aggressively in terms of sustaining capital investment. Mr. Buffett seems to understand the conjunction of deep value, share buybacks, dividends, and sustaining capital investments in drilling opportunities that have extraordinary current yields.
You said that ExxonMobil were doing things contrary to what President Biden asked them to do, but could I ask you to be more specific? Because when he was running, President Biden said no more oil, never. But now that the price of natural gas is so expensive, now he's calling these companies greedy. So which President Biden is Exxon following through?
Well, what he's asking them to do is to make the investments to increase production, which is precisely what they're doing. But the suggestion that the reason for high oil prices is Exxon's reticence to invest is silly. No oil company has been allowed to build a new refinery in the United States in 35 years. But demand for gasoline has increased substantially. What that means is we have a shortage of refining capacity in the United States, which means that refining margins are very, very, very high. If Mr. Biden wanted to see gasoline prices lower, he could help the oil industry permit a new refinery, or at the very least, help permit debottlenecking of existing refineries. Similarly, when he continues to suggest, even at the time when he's looking for relief in pump prices, that the oil industry is a sunset industry, that is not going to be around in 2035. What he's saying is that anything that you invest now that has a legacy asset value in 13 years is going to disappear. He needs to acknowledge that the year of peak oil demand is probably 2040, 2045. I mean, he needs to acknowledge fact. Finally, he suggests that oil industry profits are the cause of high pump prices. In most of the country, the pump price, that is to say, the percentage of oil industry profits as a factor in the total price of gasoline, is around 7 cents a gallon against a $5 pump price, which is to say that the oil industry profit margin relative to the retail price of gasoline is 7 cents out of 500 cents in a gallon of gas. Conversely, the cost of government, sales taxes, excise taxes, that type of thing, in the average gallon of gas sold in the United States is $1.24. So if Mr. Biden is making an ugly case about the 7 cents. Why wouldn't he talk about the $1.24 that is the government take relative to the 7 cents that is the industry take? You and I both know the answer to this. Mr. Biden doesn't care too much about the pump price, except as it impacts his ability to get reelected. So on the one hand, he has to sing the green tune, which is popular with donors like the Tides Foundation and the Hewlett Foundation. And he has to sing a green tune, too, that's popular with left coast voters and East Coast voters, the so-called green voters, while at the same time he needs to pretend to be a friend to the consumer and taxpayer. This is an impossible job. What everybody listening to this interview needs to know is that he's not trying to do it. He's just trying to get reelected.